Now that we went over the higher time frame, let's go into reading the order flow. Now, first of all, we need to determine in what type of market profile we are in. So we've got three types of market profiles. We've got a bullish market profile, we've got a bearish market profile, and we've got consolidation, which is sideways price action. Now, how do you identify a bullish market? We can spot a couple of things on the chart which can aid us in determining a bullish market. So first of all, we can see price action rejecting lows and breaking through highs. We can see those down close candles supporting price higher. So we'll be using the PD array matrix for that and disrespecting those bearish PD arrays. And how do you identify a bearish market? Vice versa, right? We'll be rejecting highs and breaking through lows. And then those up close candles will be supporting price lower and disrespecting those bullish PD arrays. Now, how do you identify a consolidating market? A consolidating market is sideways price action without any velocity. So that means price will be moving up and down in between the high and low of the range and not breaking through the high or low of that range. It will sweep external range every time and go back into the range and then fail to break outside of that high or low of the range. So let's go over a couple of examples. We've got a GBP-JPY weekly chart over here. So we're gonna spot a few things on this chart to determine what type of market profile we are in. So obviously this looks like bullish order flow, right? Now what makes this a bullish market profile? We're gonna spot those rejecting the lows, right, and breaking through the highs. So where do we reject the low? We've got a low down here. We can see price action dips in it and then swiftly moves away from it. So that is a high resistance liquidity run over here, and you can see the reaction of this old low is very significant. Now we gotta break through those highs, right? And we can see the bodies are actually closing above those highs over here. So we've got a rejection of the low and breaking through the highs. So next we're going to use those down close candles, right? Down close candles should support price higher when you are in a uptrend. And you can see that over here. If you've got a bearish candle formed, price trades above it, then back into it and using it as a support level. Same with this one. Down close candles are being formed, price trades above it and we'll be using it as a support level. And you can spot more of those candles as well. We've got one here, we've got another one here, and then once it pushes up, we form another bearish candle here, which gets tapped in and then trades away from it. So I want you to focus on this piece of price action over here, right? What is happening over here? It's the same thing that happens over here. We're rejecting the lows. You can see the body closure over here is very significant, right? We have the same thing over here. We're poking below that low, but the bodies are still not closing below the lows. So this is breaking the highs as well. Bodies closure above again, and then you can see price keeps pushing up and up and up. Zooming in a little bit more, right? GBP JPY weekly chart breaking through the highs with the bodies, right? Rejecting the lows as in the previous slides. Now we're going to mark out our premium and discount of the range. So we only want to be looking for longs once we enter that discount of the range, right? We know it's rejecting the lows, so we have the start of our dealing range over here. Then we rate those buy side liquidity and then we form our new dealing range. So we only want to be looking for longs once we go into discount. Now we are in discount, right? And we will focus here on a daily time frame when going long. So we're going to be looking for bullish signatures at this reversal. So let's hop into the daily time frame from GBP JPY. Again, that weekly low that get rejected, right? And we're breaking through the highs. And then price is slowly coming down into discount. And over here we are in discount. So now we need to look for signatures in price action to validate our long idea, right? Now what is super powerful? Every time we need that SMT, right? So we've got SMT formed on this swing low down here with this swing low down there. And we can actually see the same thing happening over here, right? Rejecting the lows and breaking through the highs. You will see the same thing happening in this piece of price action, right? Breaking through the highs and then rejecting the lows down here. So that's a very good indication. especially with that SMT over here, that we're going to continue up higher. Now, what are we going to be using after we see those lows rejected and us breaking through the highs and that SMT being formed? We're going to be using the PD array matrix, right? We want to see those down close candles support price higher. Over here, we've got another rejection of the low. Where does it occur again, right? We've got it here again, rejecting the low and then pushing up again. Do you see another one? Right, we've got another one over here. So this keeps happening in an uptrend. It will rate those lows and then keep pushing up. And once you see those imbalances form as well, that's also a good indication you are in bullish order flow. Now let's outline all those down close candles, right, where price has been supported. So first of all, over here it starts out, but the high probability starts over here once that SMT is formed, right? We're rejecting the lows, changing the state of delivery over here, closing above that down close candle, and we can see every piece of down close candle will support price higher. Again here, rejecting the lows, taking out that short-term low here, and then tapping in that key level, right? It's a down close candle, so this makes a high probability turtle soup as well. Price starts pushing up above this candle again, so we have another change in the state of delivery here, and then we see the next candle dip into that down close candle, which should support price higher. So now another thing we can look out for, right? The strong rejection of a low. You will most of the time will see that with a wick. So it will wick through that low, but the body closure will still be above that range. And you can actually see that because we're in an uptrend, we have a strong energetic close above this high. So the bodies of the candles are closing above, while rejecting the lows happens with a swift wick, and then closure will be inside of this range. Same over here, we've got this low. We can see price has a strong rejection over here, not closing below that low, and vice versa over here, we close above that high, right? So we are energetically closing above that high is an indication of a bullish market profile. So we've got a Euro USD daily chart over here, and now we've got buy side and sell side of the curve outlined over here. And we can see the same thing, right? We want to see energetic closes above old highs, and we want to see those rejections at the lows from the buy side of the curve. And we can see that actually, right? We have this rejection of the lows, and then you see that swift move up. Same thing over here. We're closing strongly above these highs, right? We have a short-term high here. We're closing above it, changing the state of delivery, using those down close candles for buy side of the curve to keep pushing up and up and up. And we have the same thing over here. Now, you might be wondering why we're not supporting this one, right? You always have to be aware, where are you in the range, right? This is a swing low to a swing high, so we need to go to discount before we can determine that change in the state of delivery being more high probable. And now if we go to the sell side of the curve, the same thing is happening over here, right? We have a rejection of those old highs, bodies closing below that old high, a strong reaction, and then we have a change in the state of delivery over here. Again, common price comes back into it. Up close candles should support price lower once on sell side of the curve, and every time you see a swing high rated with that velocity, right, it's rejecting it and then breaking down lower again. Here, another order block, and same thing happens over here again, just like here and just like here. The rejection of that high, you can see where the bodies are closing, right, not above it, so no strong energetic close above, but rather a wick and then a closure below it. And now we have those up close candles again supporting price lower, lower, lower. Same thing happens over here. Another set of up close candles supporting price lower and eventually cleaning out all the sell side liquidity. Now let's talk about a consolidating market, right? It's sideways price action. So over here you can see the price is clearly stuck in a range. We've got this swing high over here and then the swing low over here, and this is a 4-hour chart of USD CHF, and you can see every time it stays within the range. It doesn't go below this old low or above this old high, so you can definitely see it is sideways price action. Now how does that look like when we go into external and back into the range every time? If we mark it out over here, right, we have our premium part of the range and our discount part of the range. We can see every time a high gets rated, it goes back into the range, right? It fails to take out a low, takes out that high again, back into the range, takes out a low, goes back into the range, and that keeps occurring until we break out of that consolidation. Now a note, because consolidation is not a bad thing. because price goes into market cycles, right? We have expansion, we have consolidation and reversals. So when price has expanded a lot, you gotta give it some time to consolidate, right? There has to be some sort of liquidity build up, and that's why consolidation is not a bad thing